Hello traders, this is Frank Paul from Forex Mentor welcoming you to our latest weekly complimentary video presentation. This for Saturday, December 8th, 2012. Today we are going to walk you through a recent trade setup example featuring the FXM Trend Trader methodology. The way it works is that we begin with, well, one step even before this, which is proper market flow analysis. That can be combined with this first step listed here. What we're looking for is a particular type of indicator reading, a 2-bar MACD histogram slope reading across 3 consecutive time frames comprising the daily 4-hour 60-minute charts. Okay, if we have a negative slope reading on those 3 time frames at the same time, it indicates a bearish bias. If we have a positive slope reading, it indicates a bullish bias. That should be read in context of a proper continuation setup within a trending market. And if you're not in a trending market, if you're stuck in consolidation, or if the signals are materializing close to resistance in an uptrend or support in a downtrend, you're not going to act on the signals blindly. As a matter of fact, you never act on the signals blindly. They are just designed to help indicate when corrective action is out of the way and the market is really making a move in earnest. So somewhere around this first step, you would combine the indicator reading with sufficient market flow analysis, and we'll show you what all of this looks like in just a minute on the charts. We have a tool in the FXM Trend Trader service called the Momentum Matrix. I'm just going to log on to it really quick, and it looks sort of like this. Apologies, I can't fit it all onto one screen, but basically we have a panel here with a listing of 25 different currency pairs comprising probably all of the ones that individual traders who are familiar with Forex Mentor would spend any time on. We don't include any exotics, anything to do with the South African Rand, for example, or Turkish dinar, I suppose. I'm not even sure what their currency name is. But anyway, pretty much all of the majors and the most popular cross pairs derive from them. And then we have a real-time data feed which signals the trend readings of interest across the daily 4-hour 60-minute charts. Then we have low-level readings on our so-called execution timeframes comprised of the 5-minute and 1-minute charts. And if we have red lights across the board, that lines up for a short bias. Of course, green lights across the board would be a long bias, and then to the right we have a signal log. Now I have to tell you, probably about 80 to 90% of these signals are questionable. And I know that sounds like a damning statistic, but the point here is that you really have to line up the signal readout with market flow on your charts. Okay, we by no means advocate or recommend that people act on these signals, even if it's red right across the board or green right across the board. To do so in absence of proper technical analysis would be a mistake. But this is a good tool for automating your search. When you find red lights across the board, green lights across the board, you go look at your charts for the currency pair in question and you ask yourself, okay, does that look like a continuation move of some kind? In this case, it would be short on Aussie Kiwi. Yes or no? There are additional filters we apply within our methodology. For example, you don't want to act on a signal that's occurring too close to the projected high or low for the day. That could be slightly dangerous. Other signals as well, or filters I should say. But this is just designed to give you a quick overview of the Momentum Matrix. It's a real-time tool to help you find tradable opportunities applying our methodology. Okay, so that's available, and then as already mentioned, we filter the signals with market flow, market structure analysis. If it still passes muster, we look to the 5-minute chart for a particular type of momentum validation signal, then for a low-level corrective reading on the 1-minute chart, and when we get a certain type of indicator crossover event on the 1029 MACD, which is the same thing as the 1020 parity EMAs, we look for an entry signal. Trade execution and management details are all spelled out for you in our methodology. We're never applying a stop greater than 20 pips, and we look to scale out of the trade using a 4-lot methodology. We also have an EA tool that facilitates trade entry if you can't wait in real time for that to occur. Let's say you have a 4-hour retracement, it looks like it's just about done. Then if you're satisfied we're at or close to a point of a continuation move getting underway, it doesn't have to be within minutes or even necessarily hours, it could be within about a day. you would flip on the activation switch for the EA tool, set the bias, and then it would look for the particular combination of signals which would tend to suggest trade entry. Today we're going to look at a chart illustration for Euro Kiwi. Now I must admit I wasn't particularly prepared for this really violent move that we saw as little as 12 hours ahead of time. But you know, you do need to check in fairly frequently because 24 hours can be a long time in forex trading, and what looks like a retracement that's still underway at 8 a.m. one day might have culminated in a significant move 8 a.m. the very next day. So I wasn't specifically expecting it, but then again, if you're watching the metrics that we specify in our method, it was a clear and obvious trend signal short on Thursday, November 6th, with an entry price of 1.5698 rather, as of 1:13 p.m. GMT. An initial protective stop 20 pips above at 1.5718. Then, as already mentioned, we have a 4-lot scaling out methodology. You can use that, or if you don't like it, you can use whatever you prefer. We have built-in flexibility here. But our default position, that of our EA tool, is to first look for what we call a scalp exit. It's actually a little bit more than that, 30 pips, to enable reward to risk of about 1.5. And then once that level has been achieved, we look to trail the stop to break even, rendering the rest of the position risk-free. And then the second target is, in the case of a downtrend, the current daily high minus the 5-day ADR figure for a day trade target. In this case, it was 47 pips by the time we got this signal. And then a swing trade target, which is high for the day in which the trade was entered minus 2 times the 5-day ADR figure. We came awfully darn close on Thursday as I record this video for you. I'm just doing it a couple days ahead of time while it's all still fresh in my mind. And the point that I'm recording this for you, I see no reason not to hang in there for a few more pips to grab that target. That would give us approximately 170 pips profit on the third leg. And then the fourth leg, which is also by now risk-free because we've trailed our stop to break even, we just carry that open on a day-by-day basis and apply something called the 3-bar trailing stop method, which I thank Dick Thompson for bringing to my attention, and manage the trade that way, just looking at the highest high of the preceding 3 bars on the close, and drag the stop down on an iterative basis as price moves further and further in our favor. Okay, so that's the chart illustration for today. Before we get to it, I just thought I would mention the following information. If you want to find out more about FXM Trend Trader, just go to www.forexmentor.com/FXM Trend Trader. You can follow us on Twitter at FXM Trend Trader as well. Okay, let's do the chart analysis now, and maybe by that means I can give you a sense of what our trading method is all about. What I'd like to do is begin with a depiction of the momentum signal we're looking for, and we'll start with the daily chart here, on which I also have some technical analysis conveyed, and I'm going to just zoom out here a little bit on the MACD histogram panel. This is a histogram only plot of MACD using the default settings of 12, 26, 9 on the higher time frames, and a 2-bar slope reading looks simply like this. Okay, working backwards from the open for December 6th, we see one histogram bar which was preceded by a higher histogram bar. Dead simple, isn't it? Now the trick is, of course, to not only line a similar signal up on the next 2 lower time frames at the same time, which can be a little bit tricky, but also to put it in the context of proper market flow. Here I can tell you it does make sense that we have an impulse wave down from the high for October 16th at 1.6060 down to this November 7th swing point low at 153.92. A very kind of slow moving updrift, a very deep retracement as it turned out, but this was really hard to trade in the upwards direction because the individual legs up and down were pretty herky-jerky here, to use a non-technical term. But anyway, we got what is now a confirmed swing point high, and it's interesting that reversal was confirmable by the open again for December 6th, which is precisely where we got this 2-bar slope reading. So everything lined up nicely. A swing point high on a 78.6% Fibonacci, 2-bar slope reading. So as of midnight GMT, Thursday, December 6th, we've got it on the daily chart. So then any time after midnight GMT, which on this 4-hour chart is right here, we're looking for the same thing. Now, we have negative histogram slope readings here as well. It doesn't have to be just on bars above the zero line. It can also be on bars below. So it could be lower positive bars or lower negative bars. Okay, so as of right here, the second dashed vertical line, we've got this histogram bar preceded by one higher up. So unlike the daily chart here on the 4-hour chart, it's a slope reading on the red bars, not the green bars. But we can see the most recent histogram bar, when we're looking at the open of 12 p.m. GMT, it's lower than the one preceding it. In other words, 2 bars back is higher than the most recent. I hope that makes sense the way I'm explaining it. And it's probably pretty apparent that what I thought was an uptrend continuation setup didn't pan out. That sometimes happens. You have to be alert to the fact that markets do change up from one day to the next. And when we saw price coming down here with a sharp reversal on the daily chart, in addition to the fact that we see clearly market flow turning bearish, okay, there's a low up to a lower high, down to a lower low, that tells us that a change is underway. So we're 2/3 of the way to what we call a 3M, 3 as in 3 time frames, M as in momentum, bearish reading. We just have to line it up on the hourly chart. Now initially we had this bullish slope reading from about 1 a.m. Well, actually that's confirmable by 3 a.m. And isn't it interesting that this holdout reading here, moving in the opposite direction from the daily 4-hour charts, gets underway right when we have very clearly a low-level retracement against this last leg down on the hourly chart. And that metric did a proper job keeping us out of this correction until we got, guess what, a bearish 2-bar slope reading. In fact, like so. Okay, and that is apparent as of the open for 1 p.m. GMT today. Okay, right after the retracement on price is complete, we have a bearish slope reading kicking in. And that tells us that the move expected is underway by 1 p.m. GMT. Okay, so we see bearish market flow here on the hourly chart as well. Impulse wave down, retracement to a lower high, impulse wave down, retracement to a lower high. All the time frames that we're looking at here convey something about bearish market flow, which is really what you want to see. There are no specific rules about which time frame from what duration or what have you. It's just that on at least one of the 3 time frames comprising the hourly, 4-hour, and daily chart, we really need to see evidence of a progression of lower lows and highs from left to right. We do see that here very clearly. So what we do when we have that 3M reading, which suggests a valid downtrend continuation, is that we